Hello everyone. Welcome to part 2 of Basics of Stock Market. Today we'll be learning about the benefits of stock market and why investing is very important, right? And we will compare the benefits with the other counterparts like the other assets which are available, for example, fixed deposit and other government assets, right? So before we jump into the main topic of the video, before that we need to understand few of the terms so that it will be easier on the later on of the video for you to understand, right? So we'll learn first about what is Sensex, right? What is Nifty, Nifty 50, and what is Bank Nifty. So for now we'll be only covering this to understand in this video, right? So Sensex is an index which consists of the top 30 companies of India, right? So basically, an index has been created which consists of the top 30 big companies of India. Similarly, Nifty 50 is nothing but top 50 companies of India which comprises of Nifty 50, and similarly Bank Nifty is specifically index specifically meant for the banks. The top bank of India's are clubbed into this. Now why this is important or what it tells basically, right? So these are not stocks, but these are indexes, and indexes helps us to know that how the stock market is moving, and where the trend of the it actually tells the reflects the economy of a particular country. Now suppose when we talk, right, we say Sensex is going up, so basically we mean that the top companies of the contributor of any country is going up. Similarly, Nifty 50, it indicates that. Bank Nifty indicates the banking stocks of the country. So basically it's an index which helps us to identify how overall the market has grown, either it has given a negative return or a positive. Now we will speak about the main topic of this video, which is the benefits of investing, right? Benefits of investing. So I have basically clubbed into three major parts for the benefits. So basically the first one, the most important one is, so we need to understand stock market like a business, right, and not as a gambling. So when you invest in a particular uh, stock, right, so basically you are investing in its business, right? So here, without you owning the business or you being working for the business, it's available in an open market. You study the business, right, and if you like the business you can invest in it and become a shareholder. So you become a shareholder of that particular stock or share. So this is a very big point, that you, without being doing that business or doing all the hard work for it, there is already a business where the team and the organization is working, and you are getting that opportunity to invest your money in that business, so that as and when the business grows, you also, your money also grows with that, right? As and when the stock goes up, your money also increases in that many folds, right? Now we'll talk about the second point, which is the most important, which is rate of return, right? Again, these are all interlinked, right? This is the business and this is the rate of return. Again, in stock market, the rate of return is like sky is the limit. The stocks can go to multifolds, like 50 times, 100 times, in that way. 50 times, 100 times, 10x, money. Whereas in FD, how much, we can get maximum of 7%. This is the current which is going on. And if you see, right, if you see any other asset class, it can hardly give you 7 to 10% and not more than that. But in stock market the returns could be anything, but on an average if you see, it can give you around 15 to 20% if you do a average study and only invest in a big companies that can fetch you this much result. And if you do a very thorough investigation and enter into a business when it's at a very early stage, then as I said, the returns are like. And the third point, right? The third point is basically the benefits of investing in a particular stock. So these are all interconnected. And so suppose when you buy a X stock, right, and it's going up, so there are other perks that you get with it, like it might give you dividends. Again, this is not mandatory, but you might get dividends, you might get bonus, right? Then the stock splits can happen. So all these contributes in creating the wealth. So basically, just to recap, you invest in the business, right? You can directly go and invest in this established business. Second one is the rate of return, right? It is huge. Sky is the limit. And again, the different perks that come along with it, like dividend, bonus, splits, etc., right? And now let's see all these things in the chart, and practically I'll show you in the charts how the indexes have performed and how the different stocks have performed over the years. So let me take you directly to the chart. So this is the Nifty 50 chart that you're seeing on the screen now. And by looking at the trend of this line itself, right, you can see that it's in a upward movement, right? It's growing in this way. So this is a weekly chart that I have opened, and you can see the data right from when it started 1991 to 2023, right? And now I'll show you just the amount of returns that the index itself has given in these years, right? So if you see, it has given almost 63 times. So suppose if you had invested 1 lakh in the year 1991, it would have become 63 lakhs by now, and it is just in investing in the index. I'm not talking about the stocks. So now let me show you some stock specific, right? So let's take an example of Bajaj Finance, suppose, right? So again, this is the weekly chart of Bajaj Finance, and forget about from when it started, right? If you see from when it started, it's like the return would be multifold. If we just take the last 10 years, right, like from 2013 to 2023, you can see that it has given a massive return of around 51 times, right? So just think, like the amount invested during just 10 years back would be like 51 times in the current value, right? And now compare this return with FD or any other asset class, and it's not even comparable to that. Again, there are many examples like this. I'll just show you the big companies itself. Now suppose let's take an example of Infosys, right? And during this late 90s and starting of 2000, there was a very big boom of IT industries in India, right? And just see the staggering return that Infosys has given, right? So, the money has gone almost 157 times. So just think about it, the amount of return that you can make in stock market. The only thing is that you have to give some time. And again, this we are talking about like around approximately 25-30 years. Now suppose if we take only the last 10 years, right, from 2013 onwards. So if you see, it is almost like 4 times or 3 times the money. So the point which I'm trying to make here is that if you pick good fundamental companies whose business is good and stay invested for a long time, this is how the wealth is created. Your money gets multifold. It's not like a few percentage, it goes like 10 times, 50 times, 100 times even. There are other examples as well, right? Like we can see, let's take an example of HDFC. So again, this is HDFC Bank, and again you can see the trend is similar, right? And if you see the amount of return in the last 10 years, let's take 10 years only, it has approximately given around 5 times your money. So the key here is to stay invested in good companies whose business is good, whose prospects are good, and the sector in which the company is doing the business, that sector is also growing. If you can catch a few stocks also in your portfolio like this, it can give you a multifold return in a long perspective, or even in a 5 to 10 years perspective. And also if you see, right, the current GDP of India, like India is currently the fifth in size, right, in the world. And if you see, on top of it you have Japan and Germany, which are not very far, right, and India is trying to take this position, the third number in the world economy, right? And India is currently in that phase where it's moving from developing to develop country, and this is the best time to be invested in stock market for a very good returns, where people have made fortunes in the developed country. In developed countries also, which are currently developed, when they were in that phase of developing to develop, they have made fortunes in stock market, and similarly is the time now for India. So that's it for today, guys. Hope you liked the video. If yes, please press the like button and also subscribe to the channel for more such videos.